public, and this is another moment where we have the best brains at work. We are blessed to have Fiona Witaba, CPA, and a great lady with great brains. She analyzes matters in the way that you'll want to listen to her over and again. So, Fiona, welcome. You know, this is your home. Ribasasa is your home. You can always pop in here anytime, and we have a conversation. Yeah, so tell us, who is Fiona Witaba?
Thank you for having me, Wabs. It's a pleasure to be here.
Welcome.
Fiona Witaba is a CPA.
Mm-hmm.
She's an accountant and
Yes.
she's a tax enthusiast. She's
Yes.
also a digital educator.
Uh-huh.
I enjoy imparting what I have in
Yes.
terms of knowledge and sharing it to the public.
Yes.
And she's also a lover of life.
Oh, lover of life. What does
Yes.
that lover of life mean?
Lover of life means that life is meant to be enjoyed.
Uh-huh.
Even if you're in a low moment, you shouldn't sulk.
Mhm.
You should just spring back up.
Mm.
You love living.
Does it mean that on a Friday we pop some champagne and stuff
Why
like
not?
that? Oh,
As
wow.
it should.
Yes, then you get some small when you get your remuneration, unaenda pale pwani pale, sasa unajibarizi tu, unatulia
Mbaya
tu.
sana.
Ah,
Yes.
then I think I'm a lover of
Life as
lover of life too. Huh?
Okay.
Yeah. So, Fiona, I just would wish you to just walk us about tax, compliance, the tax obligations we are having, or just your understanding about everything around tax.
Okay.
Yes.
So, what is tax compliance? So, tax compliance is basically the process of a company or an entity registering for the correct taxes, maintaining the right records, and then filing the correct taxes on time and paying the taxes due.
Yes.
It's important because if you're tax compliant, then you're able to get something we call a tax compliance certificate, which enables you to access credibility from investors, suppliers, banks. You can get aid, financial aid. So it positions you well for even tenders, loans. So tax compliance is not just part of your obligations as a taxpayer, but it's also part of maintaining a healthy economy.
Okay.
Yes.
So now, then, what's then the tax non-compliance? Give us some of the repercussions that comes with it.
If you're not tax compliant, you lose out on many benefits. Like, for example, you will not be able to generate correct invoices according to the laws that are there. You may not be able to access funding from the banks because you are not tax compliant.
Okay.
You may miss out on tenders, that is business opportunities lost. And also you lose credibility as an entity, whether you're
Okay.
operating as a business or a sole proprietorship. If you're not tax compliant, you're likely to lose credibility, and that
Okay.
has value.
Okay. So does it mean that a tax non-compliance is when you do not pay the tax? Or is when you evade paying the tax, or when you pay less in terms of what is expected of you as your tax obligation?
Absolutely. It encompasses that. It also encompasses when you are not aware, therefore you are applying the taxes wrongly, or when you're not applying taxes at all. That's now what you call evasion.
Okay.
So tax non-compliance could land you in a lot of problems with KRA. You'd end up with assessments, penalties, interest. So I'd say that tax compliance is cheaper than tax non-compliance in the long run.
Oh, okay, in the long run, that
Yes.
is. Okay, just give us some of the benefits that you foresee somebody who is now tax compliant and religiously so. What is it that some of the things that you will perceive that will be more beneficial to such kind of a person?
Oh, when you're tax compliant, first of all, you can sleep better at night because you don't have to worry that KRA will be knocking at your door and asking you questions that you cannot answer. When you're tax compliant, you're able to access loan facilities to expand your economic activity. When you're tax compliant, you're able to attract credible investors who will add value to your business because compliant people will want to work with compliant people.
Okay.
When you're tax compliant, also you just avoid payments that you could have avoided in terms of penalties and interest. That is a benefit, because
Okay.
in the long run, if KRA were to look into your affairs and they found some undeclared income and paid taxes, then I'm sure at that point you'll wish you were tax compliant as an entity, as a business.
Okay. So no, probably now like an individual, or maybe you have a company and you don't make anything from the company, but you open a company. Why is it that it is so important for you to file nil returns?
If you haven't transacted in any financial activities, then you ought to file nil returns.
Why
and
is it
this
important?
is important because it enables you, one, to be compliant, because that is what the law demands of you. And you acknowledge that it's an acknowledgement that I did not partake in any economic activity. So you are coming clean to the authorities by declaring through self-assessing and saying that I did not generate anything in terms of income, so I am filing nil returns. But the danger I'm seeing around in Kenya is that people file nil returns if they feel they did not generate any eTIMS receipts, they did not leave a footprint on eTIMS, so they feel like I can just file nil returns, KRA will not know. But the danger in that is that there's different avenues that KRA is using nowadays. They're leveraging on technology. So you have things such as digital payments, it leaves a trail. Your bank deposits leave a trail. Third-party data that KRA is using to collect data on what economic activities you're doing. So from this year going forward, it is extremely dangerous to file nil returns if you've been involved in some sort of economic activity.
Okay. As in, where do KRA or any other regulator source this data from? And how legal is it for them to access this data, considering that we have Data Protection Act?
Yes. So the Data Protection Act is a very important tenet for the Kenyan citizen. But also remember that we have tax laws, and every Kenyan is obligated by the Constitution to pay their taxes due. So where KRA sources this data from is governed by also the tax structure or the tax laws that are in place. And the main sources are right now three. So we have the eTIMS declarations, so that is either sales or purchases that have been passed onto the eTIMS platform, which is a platform whereby if you generate a sale, it transmits the data directly to KRA in real time. So if you sell 100,000 right now, you generate an eTIMS receipt. Right now, this minute, this second, KRA knows that you have generated a certain sale, or as a buyer, you've bought certain products worth certain amounts. Then the second source is customs servers, which is the ICMS, the custom management portal that KRA has. So if you're in the import-export industries, then KRA collects data on activities that you're transacting there. And the third one is withholding tax certificates. So this is when you've been subcontracted or given a gig, so to speak, subcontracted to do some work for a certain amount of time under a certain contract, under certain terms. So when withholding taxes are remitted to KRA by your client or by your customer, then KRA is able to know also this customer has made this purchase of this service from this person, and this person or this entity has made this sale for this service to this customer.
Okay.
So those are the three main sources of data that KRA is right now relying on. But there's also third-party cross-referenced data. Like if you acquired property and you paid stamp duty,
Yes.
that is data transmitted to KRA. If you bought a car and you moved the logbook into your name, that is data transmitted to KRA. So at this point it becomes tricky. If you bought an entire Mercedes GLE and you're filing nil returns, and you've been filing nil returns for 3 years, so where did you get the funds to acquire this motor vehicle? So it raises questions.
Might be a gift.
So you see, it raises questions. So now you're in a position where the burden of proof is with you. Prove that it is a gift.
Okay. But don't you think that that's when it's now coming so hard in punishing the successful, those people who look a little promising in the society?
Just repeat that.
Because those people who look a little promising have to go through all that. As in, don't you think that such kind of mechanism punishes or intends to punish the successful?
I don't think so, because there's something called a lifestyle audit, WABS. And if you are portraying your lifestyle that you are affluent, there's some gain that you're probably receiving from portraying yourself as successful. So if you're receiving that gain, then you shouldn't be afraid to also match the same energy with your taxes, because remember, the more you're gaining fame and looking successful, the more KRA is also, you're drawing the attention of KRA. So you should be very wary of what you're posting on social media and the kind of attention you're drawing to yourself. Is it matching with your tax ledgers or your tax declarations? This is a personal burden, because you have people who are very successful, but they're very frugal.
Low-key, yeah.
And they're very low-key.
Yes. As you're looking at me like this, can I attract the KRA attention?
Is that a trick
For you,
question?
I think you can attract. I
don't
think
so. I'm very frugal.
yeah.
You know, accountants are very stingy with their money.
Yes. So, apart from maybe them having the trail of how the money has moved, is there any other way that they're able to, just from photos, and majority of them, including these celebrities, most of those are very, very fake lifestyle. And if you are to use government taxpayers' resources in trying to chase such kind of a person, do you think that's a misuse of taxpayers' money?
I think the people who attract a lifestyle audit are the cheapest form of acquiring taxes, because you've portrayed it all in the open. Some people even go on social media and say, this year my business has generated $2 million, so we are you're even giving data for free. So I think this is the easiest type of audit for KRA, because you've already given us what we need to pursue. We only need to now log into your tax ledgers and confirm whether the 2.5 that you're saying $1 million that you've generated this year is there. It's not punitive, it's lack of wisdom to splurge and put splash your riches in public.
Okay. So now what do you say about these Forex people? Okay, Forex. I'm not saying Forex. I mean Forex. Am I making sense?
No.
I mean those people who are actually engaging in
cryptocurrency or Forex? Which one is it?
You see, now the problem with our society is that we've actually identified all these words.
Yes.
So you mentioned Forex and somebody
boys
started
and-
thinking
yeah.
other things. But there's a lot of splash of resources and a display of wealth by people who purport to be doing Forex. Do you think there's a system trail on how they also pay taxes?
There is the people who are in the Forex trading industry also have an agenda with how they are portraying themselves as successful. Perhaps they are seeking out students to charge for classes or lessons by showing them this is the success that you could have. But they're also supposed to be paying taxes, because when you're engaging in foreign exchange, you either make a loss or a gain. If you make a loss, then that's an expense, or it's not taxed rather. But if you make a profit, then that's taxable income. And depending on the structure with which you're operating under, you ought to follow the same tax rules that are available to everyone else. Forex itself is an industry that has gains and losses. So if there's a gain, there's taxes to be paid over there.
So it seems like some multi-billion kind of an industry here in Kenya.
It appears so.
Yes, so if at all maybe the quote-unquote Forex, how do you trail that one to pay taxes?
So
The other Forex now, leave alone the legitimate Forex. Now that other Forex.
So I only know one Forex, Wabs. Maybe you can tell me what the other Forex is genuinely. I only know one Forex, the one that is in finance,
Okay.
foreign exchange.
Okay, you are not
Gain or
aware of
loss.
any other Forex in this part of the world?
Absolutely not.
You not even heard of
Please,
some
you
Forex?
know, every day is a good day to learn something new.
Yeah.
So you could elaborate what you mean so that we are on the same page.
Okay. So now maybe we can talk about business registrations in Kenya and maybe how the entire of that process goes and how it again meets tax.
Okay.
Today is tax day. We are just talking tax.
My favorite
taxations.
day,
Yes.
tax day.
Yeah.
Okay, so business registration. This is the first step to operating a business legally in Kenya. If you're operating a business in Kenya and it is not registered, then you are operating illegally because it does not give KRA a point of reference when they want to enforce taxes
Yeah, no
on your
visibility.
income. There's
Yeah.
no visibility.
Yeah.
And like I said, right now, visibility for taxes is harder and harder to evade because
Okay.
you have the digital trail that's left by digital payments. You have these sources that KRA is cross-referencing on that we have talked about. So it's harder and harder to operate an unregistered business thinking you're under the radar.
Okay.
The disadvantage of operating an unregistered business would be that, first of all, the penalty is 100,000 for every month that you go on unregistered. That's in the law. And then you have the disadvantages of you can't generate a valid receipt because you have no PIN to refer to. So you can't generate a receipt and gain business. Because right now people are asking, before they give you good business, will I get an eTIMS receipt? Will I get an
Okay.
ETR to offset against my taxes? So if you don't have that, then you can't take part in business. And then also if you are unregistered, you're also losing out on getting a bank account, being formal, getting funding. It's a starting point for legal operations and structuring for any economic activity.
Okay.
Whether it's a business name, a limited company, a partnership, so long as it has an identity.
Oh, okay. So those businesses that are not registered, how, and maybe they are surviving out there and they've been doing so good. What is your advice to them, and what do you think that maybe the KRA intelligence community are supposed to do about it?
For businesses that are operating out there while unregistered, it's risky because if KRA did some assessments and found some undeclared income, then this would lead to penalties, backdated taxes, interests that have accrued. And it's very easy to know because of the digital trail. So what I'd advise them to do is to have an objective for your business. Do you want it to be a limited company? Is it a partnership? Do you want it to be a sole proprietorship? Then register it on eCitizen. On is it called eCitizen? Yes, eCitizen, the platform for government services. Register your entity there, then start operating legally. Then from there, you could optimize your operations for taxes. Because I know their biggest fear is I will have to pay too much in taxes. It's not necessarily like that. Because if your business is just starting out and your profit generated is 24,000 and below per month, then you actually don't even pay taxes the entire year as a sole proprietor.
Okay. Is there a threshold, as in terms of the kind of income that is expected out of a business that will consider that now this one has to be registered? Or any business has to be registered?
Any business has to be registered. So long as it's operating under the Republic of Kenya, there are laws. You need to register your business. But not every business has to pay taxes. Not everyone has to pay taxes in Kenya. If you're operating a business and your profit is 24,000 and below per month, or averaged across 12 months, maybe 1 month you made 200,000, but then when you distribute it across the months, it's coming to a below 24,000 figure. It won't accrue to taxes payable. You will not be paying taxes on that.
Okay.
As a sole proprietor.
Okay. No, watu wa Mtura na Mama Mboga are I don't think they're registered. What's KRA doing about it?
KRA is also developing enforcement measures. And they have discovered that technology is a big part for tax enforcement. And if you've been reading and watching the news, you'll notice that their agenda is mostly expanding the tax base. So they're not increasing the taxes, they're expanding the tax base.
The tax bracket.
The tax base, yes. What that means is that they're getting more people who have not been paying taxes to begin paying taxes. Because there's people who have lived, died, and their fathers and mothers and them, and they've never paid even a single shilling in taxes. So they're expanding that base to include more people in this pool that we call taxes. So how they're doing that is leveraging on technology. First, they invented iTax back in, I think, 2014, whereby now you can file your own returns. Then came the biggest invention called eTIMS in 2024, at the start of 2024, which means now for every transaction, KRA gets visibility. So then they'll invent something else that goes closer to the mamambogas and closer to the mutura people. Because right now you can file taxes from your WhatsApp using Shuru, the bot.
Yeah, I did that.
You did that?
I
You
did
see,
that, and
works.
it is so easy.
It is so easy. You can file your returns on Shuru,
I was
on
surprised
WhatsApp.
how much the taxman knows me. Yeah.
Technology.
Technology.
Technology. And then there's also
Yes.
*222# the USSD code if you don't have a smartphone. So right now filing taxes is down to the Katululu. It's called a Katululu.
Yeah.
The button phone that the mamamboga has. So even the mamamboga has started having access to tax compliance. So there's more technology features that that are relatable to the mwananchi that KRA will keep developing as they are expanding their tax base.
Okay. I would wish you to also weigh in on the utility of paid taxes.
Unpaid taxes. You
Over
say?
unpaid. Over the utility over paid taxes, or is over unpaid taxes.
Okay. Unpaid taxes. So some overpaid taxes. Overpaid taxes come up when you either have VAT credits from zero-rated goods that you purchased, or you have your purchases were higher than your sales for VAT. Therefore, you paid more in VAT output, VAT input than VAT output from your sales. You also end up with refunds due from withholding taxes. So withholding taxes deducted were higher than what you ought to have been deducted as taxes in general. So that's how you end up with overpaid taxes. And when you've overpaid in taxes, that money is not lost.
Reimbursable.
It's refundable. You can apply for a refund on iTax.
Hey.
So that money is not lost. It's refundable.
It never works.
But people say
I've
it never works.
I've never applied for another one. I think I was owed 40,000.
Okay.
There's a year
And
I was owed
employment?
40,000.
Okay.
Yes.
But you see,
Now the
people
subsequent year, I was the one owing them.
So
So I was wondering.
will you revenge?
No, me, I've just filed my taxes as
Okay.
usual.
All
But I'm
right.
wondering how did it get to that? I haven't been refunded. Anyway, go
But
ahead.
you see, the refunds, people blame KRA for refunds not being received. But I'm not trying to defend KRA, but it is not KRA that is responsible for tax refunds.
Or you're not holding brief for them, eh?
I'm not holding brief for
Oh,
them.
okay,
They have not asked me to say this, but KRA is not the one that is in charge
Yeah.
of tax refunds. It is Treasury. So it's the Treasury
Okay.
that disburses funds to go into crediting the accounts for people
You think they
who
could
are
have
owed
refunded me?
refunds. They could have, perhaps, if you were patient and were willing to wait for years or a certain period of time.
So, but then
But there's people
must-
waiting for refunds even right now.
I
Long
think
queues.
it's almost 9 years now. I can still
Okay.
pursue it.
You can okay. Can you still pursue it? You can still pursue it if you can prove it, especially if you have data from your first lodge of the refund.
That's a lot of work.
A lot of
I
work for
think-
40,000.
That's a lot of work. And maybe with that utility of overpaid tax
Yes.
also merges with the issue of bank statement that you'll need for your business and the importance of the same.
Yes, but even before I go to the bank statement, if you refund, if the process of getting a refund seems too long for you, there's also the option of offsetting the overpaid taxes against other future tax liabilities. So for you, like the 40,000 that you had, that is an overpaid tax, you could offset it against another tax that you ought to pay.
Oh, so I could just spoken to my employer, tell them that these people owe me 40,000.
Yes.
Please, this subsequent month, don't deduct anything from me.
And then you just write a letter to KRA with that request, and they effect it for the amount of time that is required to gain that back.
It was that easy?
It was that easy. My people perish for lack of knowledge. Yeah.
But it also completes that knowledge of the word of God. No.
Okay, knowledge of the word of God. Okay. I'd say knowledge in general, but also of the word of God.
Yeah, so now bring us closer now, the bank statement.
Bank statements. Your bank statement is the most important document for a tax audit.
Yes.
Because your bank statement has proof of your sales, the money you have received, and this is independent proof. So this is another independent institution telling KRA, this is the money that they have generated as sales, this is the money that they have incurred, this is the money they've used up as expenses, and this is more reliable for KRA than you coming there with your ledgers that you have generated yourself, which is why your bank statement is so important, even for VAT claims. When you want to claim that you purchased more than you sold, you will have your bank statement to prove this is what I purchased, here is the money is moving out from my account and whatnot, and that's how important your bank statement is. But then there's the problem of people withdrawing from your bank to your M-Pesa, then purchasing from your M-Pesa. And I am baffled by why people still do this, because we have iBank, we have internet banking apps. Unless you don't trust your bank, in which case you need to change banks or analyze your distrust for your bank. But all business transactions primarily should come from your bank your bank account. I don't know if you've been employed, but anyone who's been employed before will know that any payment you received from a well-structured company was coming from that company's account, not from the director's M-Pesa directly to your M-Pesa. Because that is how companies maintain a trail for their transactions, and it is very important for tax purposes.
Okay. And as the KRA now are trying to expand and widen their wings, expanding that tax base,
Yes.
are they also doing something about this kitty of the diaspora, the people in the diaspora community? Is there something that is being done on that front? Ama sisi wanatulemea tu sisi wenye tuko hapa nyumbani?
You know, there's a common misconception that when you leave Kenya, you've left Kenyan taxes and everything else behind. But that is not true.
It's not true?
It's not true.
So you're being taxed there, you're taxed here again?
Yes, but it depends on two things. Kenyans in diaspora ought to pay their taxes
here
in Kenya, but it depends on two things. Number one is your tax residency. Number two is your source of income. So your tax residency means that where do you have a permanent home, and where have you lived for more than 6 months? So if you've lived in Kenya for more than 6 months, the law quotes it as 183 days in a year or more in Kenya, then you're a tax resident in Kenya. So even if you spent 5.5 months away from Kenya, and you spent 6.5 months in Kenya, you ought to pay taxes in this country for income that has not yet already been taxed in the other country. So there's something called a double taxation agreement, whereby countries get into these agreements to protect taxpayers or citizens of their countries from getting taxed twice on the same income. So like, for example, let's say you're living in a country and you've paid taxes of 20% on your income. But in Kenya, you would have paid 30%. So instead of them taxing you at 30% in Kenya, you'll just pay the difference because of the double taxation agreement. You'll just pay 30 minus 20. So you'll only pay 10% as taxes because of the double taxation agreement. Basing it on your tax residency, if you're still identified as a resident in Kenya due to the number of days you've spent in Kenya. There's also an average of 212 days over 3 years. 122 days, sorry, over 3 years. Then that makes you a tax resident in Kenya. So you spent 4 months each year for 3 years. You're still liable to taxes here. Then the other one is source of income. You know, you can be away from Kenya, but your activities that are set up under your PIN are still generating money here. So you still ought to pay taxes. So that means, like, some people are in abroad or other countries, but they have rentals here. generating money for them into their accounts. Some have businesses that are running here, and they even send money back home to Kenya to run those businesses for their guardians who are still running the business. So they're still liable to pay taxes in Kenya.
But you see, there are several examples whereby somebody goes to work abroad, and you find like the tax is almost half of their salaries the other side, which is even higher than what we are paying here. How do we handle that person now here in Kenya? As in, we consider them, or they also again pay here?
No. So if the taxes paid are higher in the other country, and a double taxation agreement exists between Kenya and whatsoever country you're in, let's say it's South Africa where you're working or living.
A double what?
A double taxation agreement. It's abbreviated as
it's
a
kind
DTA.
of a treaty.
Yes, it's a treaty between countries, many countries. So if what you've paid is already higher than what you would have paid here, then you're not taxed more. But you need to maintain proof of your pay slips showing your deductions if you are employed, your contracts with your employers showing the deductions they made, and calculations to prove that I have already been deducted said amount of taxes.
Okay. Yeah, so it means that if that treaty does not exist, what happens?
If the treaty does not exist, then that becomes a gray area. Now we revert back to your tax residency. Did you spend more than 183 days in Kenya? If you did, then that income is taxed as a whole in this country. If you did not, then you're falling within a gray zone, is how I'd describe it. But then, taxes tax policies are things that develop. So more and more are created whenever loopholes are identified. Because then there's the person who is a Kenyan but is not identified as a tax resident. But in the country that they're in, they're still not paying taxes. Because, but you see at this point, then it's the duty of the tax authority in that country to ensure that that person is paying taxes in that country. So that's a gray area.
What I'm wondering is this. Somebody actually, maybe if you are being charged, let's say 45%, here in Kenya might be 30%. Somewhere else you're being charged 45%. And you are a crew on a ship.
Yes.
It means that maybe from time to time within that 180 days, it might take dock in one of, and then you've broken that. So it seems like you are around. So you're still being taken through that punitive measure whereby you have to pay another amount again.
No, because first of all, this person in your example has already paid
or
45.
a pilot for that sake.
Or a pilot. So a pilot, where is their the question we'll ask is, where is their permanent home? Yes, they're flying and docking into different countries, and if you count the number of hours they're spending in other countries, then it's a significant amount in a year.
It
Every
depends.
day
If at all is a Luo, if it's a Luo, the residence might differ.
Okay.
I
do not want to argue with you on that.
So now the residence,
Yes.
The residence matters. That's what you mean, right?
The residence, the permanent home.
Permanent home.
Yes. So in as much as they're flying around, where is their permanent home? Where do they always revert to and spend most of their time? If it's Kenya, they are a tax resident of Kenya.
That depends. Really, that question depends. Yeah.
It's a tricky question. It needs a lot of analysis. So you'd need to present your flight tickets.
Sometimes you might be spending a lot of time somewhere, which is also not your permanent
residence.
Yes.
Or it is
just
your
because of certain
residence.
not even close. But for some technical reasons well known.
I know where you're going with that one, but I understand your question. You'd need to prove. You see, for taxes, you don't tell, you prove. So you'd need to present your flight tickets or your flight logs if you're a pilot, your accommodation setups, proving that this is where I was for this amount of time, to prove your residence.
Yeah. It also happens a lot of time that in this part of the world, you being a Kenyan, I am a Kenyan too. I'm lucky to have you as a countrymate. What happens is that we normally get so energized way towards the end of the grace period. Now the deadline. Now what happens when the when the deadline is here and the KRA system has now crashed. Yes,
like
now what
it is
happens?
crashing right now, because we are on
Is it crashing right now?
It has
as we're
already started
speaking?
crashing. Today is
Yes.
the 19th of June. The KRA system has been misbehaving the entire month,
Ah,
and Kenyans are last minute people.
yes.
So what happens when it crashes?
Ah,
So when it crashes, as a responsible taxpayer, you ought to not wait, immediately write to KRA. Take screenshots of the error messages that you're getting.
so you do them an email. You
Do them an
and-
email. Where the moment the email is sent to KRA,
Yes.
I think their email is callcenter@kra.go.ke. When you do them an email attaching the screenshot showing the failure to file within the date of the deadline, then a ticket number will be generated for you. That ticket number is also part of your proof, so that if the system fails all the way and the deadline passes, penalties will be charged. But you will have that as part of your proof that it was not because of me, it is the system that crashed. Because the High Court actually ruled sometime earlier this year that it is not the fault of the taxpayer, therefore they should not pay penalties for technical issues that are the responsibility of the taxman.
Okay.
Yes.
What used to happen before that ruling happened?
Before that
judgment?
ruling, you'd get penalties and you'd have to pay them because you filed when the system has crashed. So you'd have to pay the penalties that are due to you, yet you are going half mad trying to navigate a crashing system before the deadline.
But sometimes they can set that system that way to crash during that period, because if it has been down the entire month, then Kenyans might be having this behavior, but still.
It hasn't been down the entire month. There are periods where, for me as a tax person, there are periods where I experience downtime in that system. Not the entire block period since the month started, but just moments when it's not working, so I have to wait for it to start responding, wait for it to generate the templates. So that is what I'm calling it has already started going down, but it gets to a point before the deadline, like about 2 days, where it completely goes out, and this is because
shuts
of
down completely.
exactly the surge of trials that are being run by taxpayers, being last minute people. So we still have 10 days, so I'm appealing to Kenyans to just try now. Don't wait for the 28th.
Yeah, sure. So Fiona, I know you've actually explained a lot of these things with a lot of enthusiasm and depth. And I would have wished to have you even longer. We have this conversation. And if you allow me, I think I'll be able to invite you from time to time where we can be able to be having more of these conversations.
Absolutely.
Yeah, so maybe you just can, apart from now, maybe rallying and calling them to get into the system and do something before the 10 days lapses. You can just give us your parting shot, and I'm really, really grateful having hosted you.
Okay. My parting shot will be this, that every Kenyan is entitled to fairness when it comes to tax treatment. And as a Kenyan, you have responsibilities to pay your taxes, but the law also protects you so that whenever KRA deals with you, they deal with you in a way that is lawful and fair. And that is under Article 47 of the Constitution, where you have the right to fair administrative action. That said, compliance will always be cheaper than non-compliance in the long run. So if you can get to understand your taxes, how they work, how to enforce them, how to reduce them legally, then that would augur very well for you as a taxpayer.
Well said. I think I need to look for you in order for us to have a discussion on that Article 47 of the Tax Act and try to strip it out and look at how it applies to the common person down there. So thank you so much. I really appreciate your presence today, and I can't thank you more.
You're welcome.
Yeah. Okay, you're welcome to Rivers as always.
Thank
So, members of the public, that has been a great moment whereby I've been hosting Fiona Witaba, who is known as an intellectual and a specialist with tax and accounting, among other